The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here on this 8th day of November, 1 year since the election, and an incredible move in the markets. Is this, often we look at dates and we find that dates seem to correspond. So we'll find out. Are we making some kind of at least a shorter term top right here in this particular phase? Well, if I look at the socioeconomic aspect, I could give a good case. But if I look at the political aspect, there's a good chance that if there's any, there could be about 3 or 4 factors this week that could change the course of the market, at least in the shorter term. One is, of course, the tax issue. The second is the semiconductor index has had a spectacular move. And one of the absolute finest of the finest, NVIDIA, is about to come out with earnings tomorrow. And this could give a change of course. If I'm looking at divergence between the New York Stock Exchange, the Russell 2000, and the indices that are making all-time highs, that's a divergence that you've got to respect. Over 2,000 stocks in the New York Stock Exchange, and these are pretty important stocks. So let's go through the numbers. The E-minis unchanged right here at 25.86. The high that was made at 25.93.50 on the 7th, that hasn't been taken out yet. The candle of yesterday is going to be very important. Why? Because although it's a slightly long-legged doji, it's more like a doji opening and closing at about the same price. This is the futures, the E-mini December contract held again today, the 25.79 key 9-period exponential moving average daily support, but the MACD is still very negative. Stochastic, though, is positive. On balance volume has turned down. So 2 out of the 3 indicators are negative, but the price is the price, and the price is holding very well until we start to see a trade between 25.68 and 25.65 in the E-mini. It's about 230 points down in the Dow. Let's just say we haven't even started the high-level consolidation yet. Getting close, I believe. But mostly the weekly chart, look at this weekly chart, still very strong. The 120-minute chart is the one that's suggesting that it's going to be a bit of a struggle to get to the 25.89 area. We're at 25.86 right now. Well, the day's young. Let's see what happens. Okay, now let's go through the numbers. INTU. We'll do them one at a time. The Dow made a high of 23,602 yesterday. Trading right now 23,539, down only 17 points. It needs to break under 23,400. The 9-period moving average is at 23,470. I would say it needs to go quite a bit. In fact, it really needs to go to 23,350 or lower. And then suddenly I can say, hey, now we've got evidence that the 9-period moving average is going to be resistance instead of it walking and using it as a springboard to move higher. The weekly chart is still fabulous. Nothing technically wrong there. 120-minute chart made a peak G, pulled back sharply. It hasn't broken above. And the monthly chart is really strong. S&P. The S&P right now, the Dow is just down a tad. The S&P is down 1.58 at 25.89. Made a peak G/C. My thinking here is that there could be just one little pop to the upside above 25.88.40. Let me just double check. I don't think I updated that. That should have been 25.97.02. Let me just change that. 25.97.02. That's the number to break above. That would take you to a peak D. But anytime the S&P cash starts to trade below 25.76, that's a warning to say, okay, sideways consolidation to down. Other than that, the technicals are negative in the MACD, and the on-balance volume, although it's at the highs, it's just turned down. And stochastic is very strong at 91%. I don't think the stochastic is going to even be impacted unless the S&P drops about to the 2363, 2358 level. Then I think you'll see the stochastic start to get towards 80%. So far, this is very good action. Good action in the weekly, good action in the monthly. Let's go to the QQQ series, the NDX 100, trading again at an all-time high. The high today is 154.20, I believe, 20 what? 154.20, and this is like F/B, and the MACD and stochastic go extremely strong. It's one of the reasons why I was hesitant to add any of the sector shorts of the indices, because there is still that residual strength. I don't want to fight that strength. In fact, it might be even worth it to say, let's see a move down to confirm that we stopped going higher before you can really determine quite where the QQQs are going. And at this particular point, the key support is at 152. Let's go to 152 to 150. Key support over the next week. Let's go to the IWM. IWM is the Russell 2000, made a lower low today. It's a divergence. It's making lower lows. All-time high was 150.68. It made a low today of 145.84, trading at 146.41 right now, trying to rally a little bit, but the MACD is still very weak and the stochastic's very weak. And the weekly chart has had quite a sharp pullback. It's gone under the 9-period moving average. We're going to be watching this IWM very closely. The monthly chart could very well be making a peak E. So now I also wanted to look at gold, because gold, what I've been saying for about over a week now is that I'm anticipating that the dollar index is going to make its leg D in the daily. The second buy mode should go to a D, and at that point you should be seeing gold and silver start a rebound. Well, this is up 11 points at 1287, still within a very contained area, and actually it could be using up a lot of upside momentum if by today's Wednesday, if by Friday afternoon, Monday at this time, between Friday afternoon and Monday this time, it's not traveling right into the 1290s. Now already 1303. It needs to get into that 1303 level. That'll be very impressive. So you're going to be watching this closely, because silver's so gold is at 1286, up 11. Silver is up right now, up 25 cents at 1791. Not as strong as gold. Very interesting how the two of them have a juxtaposition. When one is looking technically good, the other one isn't, and vice versa. Let's just go to the high-grade copper right now, having a little bit of a bounce, but it didn't make a lower low. It's in leg C to the downside on the daily after making a peak D. Oh, peak D, I need to talk about this. I've got a webinar coming up, and I'll talk about it in a moment. Let me just finish this up here, because I want to go to the dollar, the DXY, which has made a peak C1, C2 at exactly 95.15. I think it should try for the D based on the UUP, which is the trading vehicle, which we are long, hasn't yet made it above 24.75. And so dollar's still acting pretty darn well considering gold's big move here. And two final things. We're looking at the TLT at 126.38. This is Lehman, the iShares 20-year Treasury bond ETF. Made a new high today at a new recovery high at 126.80s, and right now it's at 126.38. This is very interesting. My contention has been that if yields start to pull back as bonds rally, we might see money start to finally flow out. I'll be right back. I'll have to look at the when I get back. Dow's up. Dow's down 11. S&P's minus.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. So what we're looking at here is the TLT so far on the day is a new recovery high, gone way above all the left side peaks. The next challenge will be 127. Let's see, 127.27. Now, one of the reasons why I told subscribers that in the financial side, the bank stock that we have, you've got to expect some kind of a pullback. One of the aspects that was I overlaid it with other particular ingredients is that if I was correct that yields would pull back sharply, still within a trading range, but sharply from where they were, the banks will have lost that edge. The wind will not be at the back of the bank. And it couldn't waltz over the 28s, in this case for Bank of America. So there's a pullback. So what we're really looking at is that yields at this particular, the reason why I believe that this is a very important week is that if there is a change as the dollar, let's just go to the EUR USD to show you exactly the overlay that I'm looking at. The euro is at 1.158, down a fraction, maybe up a fraction, and made a trough. Well, it's not a trough yet, it's a leg D to the downside. It could be a trough D, but let's just call it C or a D. Yep, let's call it a D for now, second sell mode in the down move. It's gone below the 200-period exponential moving average, but the MACD and stochastic and the weekly chart suggest that even if there's a bounce, it should come back and retest the 115 area, number one. If I look at the USD JPY, which is the euro dollar the yen, Japanese yen currency, I need to type it into this little box here. Then what we're looking at is that it's been going higher. It has also failed to make its D. It's gone to a G in the daily, but the weekly chart, like the dollar, says it could be a little bit of a pullback, but it appears that it would like to go higher. This is my eye. This is what I'm looking at. Okay, so all of a sudden, you've got the dollar, which has had a spectacular move from the low of the 8th of September, where we went long for my subscribers, and still looking pretty darn good, but a little bit overbought, technically in the daily, and could have a bit of a rest. 2 weeks maybe, 5 to 7 sessions. That allows for gold, and this move on gold right now, if it closes up 11 or even 13 points rather than just up 7, I have to say, you know what? This could be a stronger move to the upside. I'm still calling it a counter trend rally. It's one of those situations where if you, in the last day or two, or even tomorrow, if you get into your gold stock and it keeps going up and then it recycles in the weekly chart, you've gone in at a really good point because most of them have had a very strong pullback. But I'm looking at the weekly chart, and the weekly chart is suggesting, like the euro-dollar currency pair, that in fact this is a bounce and it's going to need a little more testing. Whether it breaks 1260 support, I'm not sure, but that 1260 support looks like it needs to be retested. And if it is tested and breaks, that's going to be important. If it doesn't even get there, but it gets to the 1303 and then 1309 area, that is really good. So so that means that dollar could have a change of trend shorter term. Dollar has a change of trend shorter term, plus the currencies. Aha. But now we get to crude oil. And crude oil's had a spectacular move. And it's had a move that is based on extraneous factors, not really just crude oil, because it's a whole political scene that's the background. So within the context of the leg E with a doji candle, if in the next 2 days crude oil trading at continuous contract trading at 57.27 in fact spikes to the 59.80 or touches even $60, something else is going on, and it says, hey, this could be a little more serious than you think. Another reason why this week is so important, it's an inflection deflection point, because if in fact there's a sense that crude oil, yeah, things are not so great over there. The Saudis, we don't know what's going to happen here. It could impact crude oil, but in the shorter term, there's enough crude oil to at least alleviate other than emotional fear. There's enough crude oil to really handle everything. Then we'll see if 55 is at 57.28. If the 55 area can hold support. I think it's going to at this particular point. I think this is an outlier. This is something different. Aha. Now, why is it so important? Because look at the XLF. The XLF had a spectacular move to a peak F. Now I can call it an F. Remember, I said that I'm only putting the oval pattern to show it, but my thinking was that we were really looking at an arch formation, and that's the arch formation right there. It's exactly what we're looking at in the financial S&P Spider Fund. And now I can put this in as the peak F because the technicals have been very weak. And that says that yields could, in fact, go down a little further because the banks, the financials, look as if they need to come down a little bit more. I still haven't got a confirmation of anything but just the red plus sign on the E in the weekly chart. But if the 25.80 area is hit in the next 2 days, it says, oh, be careful with the financials on the shorter term. Now there's another one where this week is so important. Now if I go to the TBT, it went to a right arm extension peak E in the daily. What is a right arm extension peak E? In the Chapman Wave methodology, there's something called the Rogue Wave, and that says all the technicals were very negative, and there was just one sudden pop to the upside to get that higher high when it said high tide at noon and at 12:06. One of the waves didn't see the sign and went higher. In this case, the MACD was not as strong as the stochastic was not as strong as the MACD, but they both ran up a little bit, so there was some confirmation, and that's like a right arm extension because you had at least one of the technicals confirming the rally, and then there was a reversal to the downside. And the TBT suggests that, once again, it's got this arch formation and looks like at 34.42, up 15 cents right now, that the 34 to 33.5 area will probably be the next area of key support and is likely to be tested. So I wanted to go through that. Now, I'd say there are questions in the den about the XLF, etc. So the XLF, when I'm looking at it, I'm saying, hey, still a high-level consolidation. Had a spectacular move, except it's an F in the daily, an E at peak E in the weekly, and an E, leg E in the monthly. No, I got to double check that. Wait a minute. Yeah, it'll have to be. So 26.92, 26.93. It did it by 1 penny. I remember now, it did it by 1 penny. So leg E in the monthly. Now, what's this all about? So coming up on November the 20th, between 5 o'clock and 6:30, I have a webinar. This webinar it's going to be one that I'm going to try to do a lot of things. I'm setting the mood for what we're looking at. And what's really important about this particular webinar is what can we anticipate for 2018. 2018. For 2018, I don't know about 2018. None of us will be around. But 2018, I'll be talking about that when we get back and why these peaks and troughs are so important. Basil Chapman, Tiger Ignition's hour. Dow's only down 3. S&P's now up 0.38.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhoades, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. So this is my opening call, my daily newsletter. Very, very comprehensive look at the markets every single day and what we're following, what we own, what we have. At this point, I think it's 5 or 6 stocks we have on the long side. They're all positive. One, in fact, had a fabulous move just today alone. It's up 3.63. Yesterday it was up as well. Of course, the day's young, but it's up right now. And we do have one short, and that short is a little underwater, but I want to keep that short for now because I believe in it at this particular point. So my opening call, the webinar I'm going to have on the Monday, November the 20th, between 5 o'clock and 6:30 p.m. Eastern Time. I'm going to present the cover is what can we anticipate for 2018. Now, that's a really tall order because of a number of factors. But I think that we can get a sense of what sectors are getting ready for a timeout and what sectors, in fact, could participate very nicely. So I'll cover. Can high techs continue to lead? Let me go there right now. Just before we go there, HIMX, I had a question from Dan W. About HIMX. I said to him to wait. This is now peak C at trading at 10.64. Up 4 cents. It's holding the 9-period moving average. The MACD is good. Stochastic's holding. It's at 79%. I'd like it to be higher. On balance volume struggling a little bit. The weekly chart has this pattern that says it goes up. It's like a stair-step move, and then sharply down, and then goes sideways, and then it goes up, and then sharply down. Is this another one of the U-shaped turn patterns? Here's what I'm going to recommend, Dan. I'm going to recommend. Let's see. Hi, Basil. If you have a chance today, can you please update your review of HIMX? I can't remember what it is. Doesn't matter. As you suggested, it needed more time. They announced earnings BMO tomorrow. What's BMO? Before the market opens tomorrow. Okay. So I'd love to get your insights. By the way, I tend to look at this on a monthly, quarterly perspective, as I believe it will be a long-term winner. I use the short time frames to trade options around my core position, considering every winning trade as an offset to the cost basis. Dan, I love that thinking. So because of that thinking, I'm going to suggest to you that to buy an option right now with a chance of it being wiped out, as opposed to it being very successful. And at this point, I would say that a good earnings at 10.65. I'm not sure if it's going to pop more than a point. If it does pop, but a point, if you're paying 35 cents or 23 cents for an option, would be fabulous. Now, I would do this. I definitely wouldn't be thinking November option, but the way the pattern is working, I suspect that it's going to be making a higher high above peak C, which is at 11.97 in the daily, in the monthly. Oh my God! In the weekly chart, what I wanted to say is the daily's got a peak C, and the weeklies and the monthly's got a peak B. So D is what we're looking for. So here's what I'm going to suggest. Consider that one, I don't know how many, but I'm saying one tiny part of your option could be wiped out if you get it for November. But if you get it for December, unless there's really bad news, and the way the chart is looking, it really would have to be bad news. I really should be looking at what HIMX is, what they do. But all I can say is the pattern says at 10.64, 10.30 to 10.20 should be good support. And 1020 is the 9-period moving average in the weekly. And if there's even a hint of good news, this can quickly start going into the 11:20, 11:30 area. That's what you're looking for. Here's my thinking. After the news is, you can do a whole bunch of things with the options. But if you are thinking it'll be great to get a call option at this particular, oh, wait a minute, what do? You use short time to trade options. Okay, you didn't say to hedge or anything, you said to trade. Because you've been in it and you have a profit, just a tiny little percentage. Because why? Because if you are correct and you can get an option here for tomorrow, 10.65, I'm guessing that it's probably 23 cents or something for the 10. If I don't think that I have 10.50s, it'll be in an 11. It's probably way less. I would just nibble on one of those things. If especially it's at 11, if it's 8 cents or 11 cents. I was thinking there were 10.50s. They probably know 10.50s. You know what? I'm going to do this right now. Give me a second. Options. Where did it go? There it is. Option station, HIMX. Okay, give me 1 second. Trade, Think or Swim platforms. They have really, I love the way they do it. But anyway, this is what I've got. HIMX. All right, we're looking at, what am I looking at here? Oops. It's trading at 11. Yeah, there we go. So, oh, it does. Wait a minute. That's what I was thinking. There we are. So it's the 10.5s and then 40 cents. 10.5 at 40 cents. I was thinking a premium of about 23 cents. I was wrong. It's a premium of 20 cents. I was just guessing this. So, oh, that's the put. Now I'm looking at the long side. Oh, it is 55. So that is a premium of 35 cents. No, on the 50s, that'll be a premium of just 15 cents. No, 5 cents. What am I doing here? 5 cents for the 1050. Am I looking at the 1050? Yes, I am. Okay, here we are. I don't want to waste any time because you're the one that's the expert there. I'm going to suggest that if you get, so it's at 55 cents, I wouldn't go for the 11s. I'd actually go for the 55. The worst case is that it'll take a little while if you get to December. Oh, this is not December. This is probably November. Yeah, I'm not going to be able to do it in a short period of time. I don't want to rush this. What I am going to say is you could just start a small position, 1 or 2. Whatever the number is, it's just a very small part of your usual option play. And I'd get 1 for the long side, knowing that there's a chance that it could shrink by 70%. But the way I'm looking at, unless there's really bad news, it should rebound and it should go above $11.10 to start leg D. And then tomorrow you can start. I wouldn't even waste time. I'd wait Friday, I'd wait Monday, maybe Tuesday I'd start looking at a different option position. But that's what I'm looking at now, that there's a chance that HIMX, now it's up 10 at 11 cents at 10.72. I think it's, if it wasn't for the earnings announcement tomorrow, I would say, gee, this stock looks like in the next 3 to 4 days, it's going to try for the 11, 12, 11, 13 area. Hope that helps you. All right. So now the other questions have come in, but what I want you to do is, I wanted to just go back here to say, so I'm going to be discussing, can high techs continue to lead? Will the financials be impacted by yields? And where will yields be in 2018? The chances for inflation or deflation, I think it's still something to talk about. The dollar and gold's longer-term outlook, very important. Autos, real estate, and the socioeconomic political nuances in the next phase. Worldwide stock market euphoric phase. I haven't heard anyone talking about that. I think our market's going to move up because other people are going to be wanting to buy American companies. And that's going to make for a worldwide stock market move. Is it in 2018? Possibility of a serious consolidation before that happens. And politically, the chances for a third party are increasing. Stock sector benefit a week. Basil Chapman, target this hour. That is my on November the 20th.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So the question here is Fossil, F-O-S-L, what a GT1. Yeah, Fossil plunges down 94 cents to 5.91, down 13%. These are just looking terrible. VSI, which is the VSI, Vitamin Shop plunges, gaps down 20%. Down 83 cents to 3.48, a bit of a green candle, but really not good. XRT right now is trying to rally off the lows, but it has come from the 40, almost 42 area down to the 39. Not a big deal, 3 points, 10% in this area. But I have to tell you that the weekly chart is suggesting that any bounce will have to do a bit of retesting into the 38s, and any rally has strong resistance, 39.5 to 39.90. So yeah, this is not very good. Good point. KRE, I had a question about KRE. That's the regional S&P. Where is it? So that went to EFG. So that's ABC. So this goes to a stair-step move. E. Then it gives a sell signal, actually a sell mode. Then it has a right shoulder spike, F, and then a quick G, and now it's plunging again. So the KRE regional, so S&P. So here's the question. Bob wants to know, KRE regional bank ETF, safe to short? Safe to short. I don't like that word safe when it's coming to shorting anything in this particular market, and you know why, because the buying has been relentless. But let's look at it in terms of yields. Well, the yields are getting close to the area where this is going to be very important. If they break down from here, it says they are going to go quite a bit lower. This is what I'm saying. This week is such an important week because all support levels are going to be key and all resistance levels are going to be key. We're looking at 200-period moving average in the KRE at 55.06, down 35 cents. It's gone to a leg B, a gray B in the weekly chart, strong pullback, and the monthly chart looks very much like it wants to make that H pattern. Okay, if you're going to short, I would rather see you use a put, a December put, make it a 55 put. I don't even mind paying up a little bit, but I'd rather do that. That's the one way. But a second way to do it is if you are going to short, you've missed the best opportunity. When it broke under the 9-period moving average yesterday, that was a perfect time to say, uh-oh, back under the 9 EMA. So now you've lost 56, 50, say, $1.50, you've lost about 2-3%. All right, no big deal. This is what I'm really looking at. The weekly chart, technicals are still not bad. And therefore, I'm going to say to you, have a little patience. You could do a little nibble here, 55.07 as a short. I would prefer to say to you, if you do make it in your mind, you've got 2 positions. One is to nibble here, but the real position is at 55. At 55.04 right now. It's at 56. It's at whatever it is over 56. 56 and a penny, 56.02, I don't mind. But over 56, that's where you want to start the short position. But because it's coming off a low of 54.59, that's $1.50 you're giving up. I'm going to say to you, that's not your best position as a second position. You've got a little nibble here on the short side, and then you're going to add to it at 56.5. So that can't be a full position at 56.5. Or you just step aside and you have patience and you wait. And then if you do nothing, and your first shorting position's at 56, you can go a little heavier. But I definitely would have a stop 1 penny above the candle of the 7th, 57.11. So whatever you do, if this trades above 57.11, chop, 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 sideways, that's all it's doing. You have to see one sudden spike to the upside that bumps. You could go 55.92. That's also fine. But you want to bump into that area, and the same moment it gets there, within an hour, it's got to be pulling back, and you should already have a gain. That's the way I would be doing it. But let's go to, so safe. I don't know about safe because the weekly chart is still holding technically pretty well. But on the daily basis, I would say any rally should start to fail. Now, here's the reason why I say to nibble on it here, because if the weight of the selling pressure takes out 54, 59, the low of today, either today or tomorrow, I think it's going to accelerate, and my target would be 53.63, the 200-period exponential moving average, based on the technicals right now. Okay, so let's go to Julie wants to know about WLL. I don't know if I've notated this for a while. This is a strong second ABC, AB. Okay, what's the question? Let's see. WLL, CHK, WFT, ECA, XOM, USO, just to have a few, huh? Uptrend over in energy? No, I don't. Oh, boy. All right, I have to do this. I have to give it its full due. We're looking at WLL, Whiting Petroleum. Who was it who sounded like a reverend? He used to call in from Baton Rouge. No, Baton Rouge. Will, it was Will, wasn't it? Yeah, we used to have a caller, Will. And he used to call in from, where was it? Yeah, it was Will. Yeah, Shreveport, there you go. Everybody in the den loved him. Loved the guy. Great memories. So Will used to talk about, I remember calling about WLL once. It's in leg E in the daily, just above the 200-period moving average, just under the 200-period SMA. But the MACD is very strong, stochastics at 93%. So I have to move over to the weekly chart. In my webinar that I'm going to be doing, included, for those people who are going to be interested in the Chapman Wave methodology, I'm doing another one in December. And that's going to be a whole day. I've done them before. I love that. Where we start at 9 and we finish at 4:30, 4 o'clock. The market closes 4 to 4:30. We start looking at what will be the next day's trades, etc., and what we've done and what we've learned. So it'll be a whole day of Chapman Wave methodology. And the reason why I brought it up is that you like to look at time frames. Look at the way that the daily chart moves so nicely to the weekly chart, and it's only an E, and yet on a weekly basis is in leg B. That is usually very good. Hey, wait a minute, the monthly chart is horrible. So WLL, Whiting Petroleum trading at $6.80, down 20 cents. I would not be shorting the sector. There's just too much news out there that could, in fact, have these sudden spikes. I just don't see. I don't see a trigger for the down. I see it technically, but if on a fundamentals level, I would just say to you, no, Judy. I don't think so. If I'm looking at the included here, you've got the USO, which is United States Oil Fund. Look. This squeaked to an F today. Maybe it's an F, maybe it's recycled to a brand new F/B. But the MACD is very strong. Stochastics at 94%. On balance of volume is a little overbought, but very strong. But it's this weekly chart that is very impressive. Here it's a different thing. The monthly chart is so close to breaking above. You remember the euro, the lowercase h goes to a lowercase m in the Chapman Wave methodology. We're going to be talking about that in my webinar coming up, the all-day one. But we will also, of course, do it in the webinar coming up for subscribers coming up on the 20th of November. Now, look at this. The United States Oil Fund holding really well here. No, I don't see a short at all. Be careful. Don't short. Dow's up 76 cents. S&P's up 5. Basil Chapman target conditions are We'll be right.
Hi, I'm Steve Rhoades, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhoades. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. So we're looking at KRE, and the question was, is that really a B or an E in the monthly chart? At this point, I see no reason why to change it from an E to a B to make it definitive. I'm calling it an E/B, and until 49 gets taken out on the downside, I'm calling it probably a B. And at this stage, let's just see where it lands up making some kind of a base. But it could be time, and that's really what I wanted to talk about in my webinar on the 20th of November. I'm going to talk about the time issue. I think there's going to be a certain phase, you know, sometimes let's talk about the rotational correction that uses time rather than price, and that's going to be a big factor as well when we get to a week and a half, 2 weeks time. I think that's going to come into play. Now, so Sarah wants to know about Apple. So question is, what is the count? I've got the count here as a potential leg F. It actually looks more like an F/C, A, B, C. And I'm going to put that in. I think there's just enough power in the market right now to go on for another day or two. We'll see what happens. So there's Apple all-time high right as we speak, 175.57. Oh, let me just double check. Yep, all-time high. Monthly chart, leg C, weekly chart, leg D, recycle to a D. And it's above all the trend line resistance. Support is at 170 to 167 on the daily. If that gets taken out in November, that's going to tell me a tremendous amount about the next 3 months We'll see. And I'm not going to make any statement right now, but other than it's acting extremely well. The XLK, same thing. XLK is G/C, made another all-time high today. But look at this extension in the weekly chart. That is parabolic. Look at the extension in the monthly chart. Leg C, it just missed making a peak C, so this is still a leg C. S&P Select Tech Spider Fund. So I have to tell you, when these correct, we might see that they take a lot of time and another group 2 starts their big move to the upside as these guys take a well-deserved breather, and that's what I'll talk about in the webinar. So have a great day. I'll see you tomorrow. Stay tuned and check my open. I hope you will be satisfied with it, and I'll see you tomorrow. Great.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.